The rise and fall of Wall Street's biggest bubble, the 1929 stock market crash. A bubble, the biggest Wall Street had ever seen. It didn't just crash stocks, it broke the economy. It broke families. It broke America's faith in money itself. Your dream of buying a house? Crushed. Your children's future? Uncertain. Now imagine this happening to millions of people on the same day, at the same time. October 29th, 1929. Black Tuesday, the day Wall Street didn't just crash, it exploded. Fortunes disappeared in hours. Grown men wept in the streets. Some jumped from buildings. But here's the crazy part. Just weeks earlier, everyone thought they were geniuses. Everyone thought they'd found the secret to getting rich quick. This is the story of the biggest money disaster in American history. A story about greed, fear, and what happens when millions of people believe the same beautiful lie. Let's go back to 1921. World War I just ended. America won. And suddenly, everything felt possible. Imagine living in a time when every month brought something new and exciting. Cars that anyone could buy, radios in every home, electric lights replacing candles, refrigerators keeping food fresh. The world was changing fast, and people were making money faster. Factories couldn't build things quick enough. Companies were growing like crazy, and their stock prices, they were shooting up like rockets. Here's what a stock is, by the way. Think of it like owning a tiny piece of a company. If the company does well, your piece becomes more valuable. If it does badly, your piece loses value. Simple, right? In 1921, you could buy a piece of the American economy for very little money. By 1929, that same piece was worth 6 times more. 6 times more. In just 8 years, people who bought stocks became rich. Not slowly, not carefully, but fast and easy. Your neighbor bought some stocks. He bought a new car. Your cousin invested. She's going on vacation. The guy who drives the taxi. Even he's making money in the stock market. And everyone's thinking the same thing. Why am I working so hard when I could just buy stocks and get rich? So teachers stopped saving. Farmers borrowed money. Factory workers bet their wages. Even maids and cooks were rushing to Wall Street. The stock market wasn't just for rich people anymore. It was for everyone. And here's where things get interesting. Banks had an idea, a dangerous idea. They said, why wait until you have enough money to buy stocks? Borrow from us. Buy stocks now. When prices go up, pay us back and keep the profit. This was called buying on margin, and it sounded like magic. You only needed $10 of your own money. The bank would lend you $90. Now, you could buy $100 worth of stocks. If those stocks went up to $120, you'd pay back the bank's $90, keep your $10, and pocket $20 profit. You just doubled your money without really having it in the first place. What could go wrong? Everything. But nobody was thinking about that. By 1929, Americans owed $8 billion in borrowed money. All of it bet on stocks. All of it hoping prices would keep going up forever. And why wouldn't they? Prices had gone up every single year. An economist named Irving Fisher stood in front of cameras and said something that would haunt him forever. Stock prices have reached what looks like a permanently high plateau. Translation: prices will stay this high forever, maybe even go higher. This is the new normal. People believed him. After all, he was the expert. But there's an old saying, if something can't go on forever, it won't. Summer of 1929. On the surface, everything looked perfect. The Dow Jones, that's the scoreboard for America's biggest companies, hit 381 points. An all-time record. People were celebrating. Newspapers printed stories about ordinary folks becoming millionaires. Wall Street felt like the center of the universe. But underneath, cracks were forming. Car companies noticed something weird. Fewer people were buying cars. Why? Because everyone was spending their money on stocks instead. Steel factories slowed down. Construction dropped. Farms were struggling. The economy, the real economy where people make and buy actual things, was getting weaker. But the stock market, it kept climbing, higher and higher, completely disconnected from reality. Think of it like a balloon. The economy was the air inside, but the balloon kept getting bigger even though no more air was going in. It was stretching, getting thinner, more fragile. The Federal Reserve, basically the boss of all banks, started getting nervous. They thought, people are borrowing too much money. This is dangerous. So in August 1929, they raised interest rates. That means borrowing money became more expensive. They hoped this would slow things down gently, like tapping the brakes on a speeding car. But here's what they didn't realize. They weren't driving a car. They were sitting on top of a bomb. September came, and something changed. Prices started acting strange. One day up, next day down. Up again, then down even more. Investors got confused, then worried, then scared. The smart ones started selling quietly, taking their profits and walking away. But most people? They held on. They believed. They had faith. It's just a bad week, they told themselves. It'll bounce back. It always does. On October 18th, the market dropped hard, really hard. Panic was spreading like a disease. And once panic starts, it feeds on itself. People who were confident last week were now terrified. People who were buying were now selling, and people who were selling were now running. The stampede had begun. October 24th, 1929, Thursday. The day started normally, birds singing, coffee brewing, people heading to work. But inside the New York Stock Exchange, hell was breaking loose. The opening bell rang at 10 a.m. Within minutes, the place turned into chaos. Sell orders flooded in from everywhere. Thousands, then tens of thousands. So many that the machines printing the stock prices couldn't keep up. Imagine trying to count raindrops during a hurricane. That's what it was like. Prices were falling so fast, nobody knew what anything was worth anymore. The ticker tape, the machine showing current prices, was running 3 hours behind. You'd call your broker asking, "What's my stock worth?" And he'd say, "I have no idea. I won't know for 3 more hours." 13 million shares traded that day, a record that nobody wanted. Outside the exchange, crowds gathered, thousands of people standing in silence, staring at the building, watching their dreams die in real time. Police showed up, worried about riots. Some people fainted, others cried, a few screamed. Inside, traders were having breakdowns. Young men who'd felt like kings last month were now watching fortunes disappear in minutes. But then, something happened. The richest bankers in America, we're talking the guys who literally owned banks, met secretly at J.P. Morgan's office. They made a plan, a desperate plan. They pooled their money together and started buying stocks, massive amounts. The biggest, most important companies. They wanted to send a message. We believe. Don't panic. And for a moment, it worked. Prices stopped falling. The market stabilized. The ticker tape caught up. By the closing bell, things looked okay. Not good, but not disaster. Newspapers the next day printed hopeful headlines. Worst is over. Bankers save the day. People wanted to believe. They needed to believe. But deep down, something had broken. Trust was shattered, and fear had taken root. The weekend came. People barely slept. Monday morning, October 28th, the market opened, and immediately it crashed again. This time, harder, faster, meaner. The bankers who tried to save things on Thursday? They were now selling too. Even they knew it was over. 13% gone in one day. But Monday was just the preview. Tuesday was the main event. Black Tuesday, October 29th, 1929. The darkest day in Wall Street history. 16 million shares traded. Absolute chaos. Prices weren't just falling. They were collapsing. imploding, disintegrating. Companies that were worth millions last month were now worth pennies. Radio Corporation of America, RCA, the hottest stock in America, dropped from $505 to $26. Let that sink in. If you owned $100,000 of RCA stock, you now had $5,000. $95,000 just disappeared. General Electric, one of America's greatest companies, lost half its value in weeks. People who thought they were rich woke up poor. People who were comfortable woke up broke. People who were poor woke up homeless. The phone lines were jammed, everyone calling their broker at once. Everyone screaming the same word, sell. But there was nobody left to buy. Imagine you're in a burning theater. Everyone's running for the exits at once, but the doors only open so fast. That's what Black Tuesday felt like. By the end of the day, $30 billion had vanished from the American economy. To understand how much that is, $30 billion was more than America spent fighting World War I. It was more than the entire federal budget. Gone in one day. And the worst part? This was just the beginning. When the dust settled, people realized something terrifying. The crash didn't just destroy stock prices, it destroyed the entire system. Remember all that borrowed money, $8 billion that people owed to banks? They couldn't pay it back because their stocks were worthless now. So the banks that lent that money, they went broke too. And when banks go broke, they can't give people their savings back. So ordinary people who never bought a single stock, rushed to banks to withdraw their money before it disappeared. These were called bank runs. Thousands of people lining up outside banks, desperate to get their cash. But banks don't keep everyone's money in a vault. They lend most of it out. So when everyone wants their money at once, the bank simply doesn't have it. Between 1930 and 1933, 9,000 banks collapsed. 9,000. Think about that. Your local bank where you kept your life savings? Gone. Your money? Gone. No insurance. No protection. Just gone. Businesses couldn't get loans anymore, so they fired workers. Those workers couldn't buy things anymore. So more businesses closed. More people got fired. It was a death spiral. Factories shut down. Stores closed. Farms failed. By 1933, 1 out of every 4 Americans had no job. 25% unemployment. Families lost their homes. People lived in shacks made from scrap metal and cardboard. They called these settlements Hoovervilles, named after President Herbert Hoover, who people blamed for not helping enough. Soup kitchens fed thousands daily. Bread lines stretched for blocks. Children went hungry. Parents couldn't afford medicine. Dreams died. This wasn't just an economic depression, it was a human catastrophe. And it lasted 10 years. An entire decade of suffering. The Roaring Twenties, the decade of jazz, prosperity, and optimism, had led directly to the Great Depression, the decade of poverty, despair, and survival. So what caused all this? Was it one person's fault? One decision? One mistake? Number. It was a perfect storm of human psychology. First, greed. Everyone wanted to get rich quick. Nobody wanted to work slowly and save carefully. They wanted millions, and they wanted it now. Second, overconfidence. People convinced themselves that this time is different, that the old rules didn't apply, that prices would rise forever. Spoiler alert, it's never different. Gravity always exists. What goes up must come down. Third, borrowed money. When you borrow money to invest, you're making a bet. If you're right, you win big. If you're wrong, you lose everything. $8 billion of borrowed money created an artificial boom. When reality hit, the collapse was catastrophic. Fourth, no safety nets. In 1929, there was no system to protect people. No insurance for bank deposits. No rules preventing banks from gambling with your savings. No unemployment benefits if you lost your job. When things went bad, people had nowhere to turn. After the crash, America changed. President Franklin Roosevelt created new rules. The FDIC was born, insurance for your bank deposits. Laws separated regular banks from risky investment firms. Social Security provided a safety net for the elderly. These changes helped prevent another disaster like 1929. Not perfectly. We've had crashes since then, but never as devastating. Here's the thing, though. We keep forgetting these lessons. In the 1990s, we had the dot-com bubble. Companies with no profits and no products had billion-dollar valuations. Then it popped. In 2008, we had the housing bubble. Banks gave mortgages to people who couldn't afford them, then gambled on those mortgages. Then it popped. In 2021, we saw cryptocurrencies and meme stocks explode in value based purely on hype. Then they crashed. Different tools, different markets, same human emotions. The great investor Warren Buffett put it perfectly. Be fearful when others are greedy, and greedy when others are fearful. Translation: when everyone's rushing to buy because prices are rising, that's when you should be careful. That's when bubbles form. And when everyone's panicking and selling, that's often when the real opportunities appear. The 1929 crash taught us something vital about money, markets, and human nature. We're not as rational as we think. We're not as smart as we believe. And we're definitely not immune to making the same mistakes our grandparents made. Bubbles happen because we want to believe in magic. We want to believe there's a shortcut to wealth. We want to believe that we're special, that we've figured out something others missed. But markets don't care about your hopes. They don't care about your dreams. They care about reality, and reality always wins. The next time you see something promising, easy money, fast returns, or guaranteed profits, remember October 1929. Remember the teachers who lost their savings, the families who lost their homes, the children who went hungry. Remember that every bubble in history has popped. Every single one. Because if there's one thing the 1929 crash teaches us, it's this. The market can stay irrational longer than you can stay solvent. But eventually, always, reality catches up. The story of 1929 isn't just history. It's a warning. A warning about what happens when optimism becomes obsession, and when faith in money replaces common sense. So the next time you see a market soaring and everyone says, "It'll never fall," remember, that's exactly what they said in 1929. If this made you think differently about money and survival, subscribe for more deep dives into the systems that run our world and what happens when they break. See you in the next one.